The awesome oscillator. Yes, that is the real name of this indicator. Of course, we need to explore this one. Welcome back to Exploring Indicators, a series in which we build trading strategies around individual indicators to discover the most profitable way to use them. And of course, today we will be taking a look at the awesome oscillator. The awesome oscillator probably reminds you a lot of the MACD histogram. That idea popped in my head when I first took a look at this indicator. I have them now both turned on just so we can do a quick comparison. The awesome oscillator, of course, being on top, the MACD histogram being on the bottom. They are very similar, but the first thing I noticed, the biggest thing I noticed, is that the awesome oscillator is a lot smoother in its moves. It gives a lot more confidence in its direction. Just take a look at this down move here with the corresponding down move on the stock chart. The awesome oscillator just has this thing in red, 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 crosses the zero line, still red, 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 before beginning then to bounce back up. Whereas the MACD histogram is red, but it's like, oh, it's trying to bounce, never mind. Oh, it's trying to bounce, never mind. Oh, never mind. Oh, never mind. The awesome oscillator just looks a lot smoother, which might be a very profitable thing for us. So I've gone ahead and built out the most obvious trading strategy that stands out to me when taking a look at this oscillator. Buy when the oscillator switches from red to green, and then sell vice versa when the oscillator switches from green to red. Now, if we go ahead and take a look here at SPY, the S&P 500 daily ETF, we can see, oh, Trey, it makes money. You know it's up nearly $11,000, but it's got a max drawdown percentage, 224%. That is way too high. This is not a profitable trading strategy on the S&P 500. Now, I've done a little bit of poking around because, of course, I have. If we go take a look at some more volatile individual names, like let's take a look at Nvidia, up over $213,000, a max drawdown of only 12%. Some other of the Magnificent Seven, Tesla is up 138 grand, max drawdown only at 15%. Something like Apple, we're up whatever 220,000, max drawdown 10%. So maybe a trading strategy like this works better on more volatile sort of individual names than it does the index. I was about to hop into the source code of the strategy, and I'm still going to do that. Just before I do, I realized in that last clip, we just looked at a ton of like extremely strong names, Nvidia, Apple, Tesla. No doy, the strategy makes a lot of money. So let's take a look. Returning subscribers will know I like to look at this ticker in my back testing. This is Ford, ticker symbol F. And I like to look at this ticker because yes, Ford's been a great like dividend investment company, but as far as price action goes, it's basically gone sideways for decades. It's not been like a strong stock or anything like that. So if a strategy could perform on this, it's got a higher likelihood of actually being a good strategy, right? And you can see up $99,000 with a max drawdown percentage of only 20%. So the strategy does actually look okay on individual names. Once again, for some reason, just doesn't really like the index, doesn't really like the S&P 500. I would assume it has something to do with volatility. Just quickly before we get into the source code, I want to bring this up because there'll be a lot of new people watching this video that have maybe never been on the channel before. This sort of custom coding within Thinkorswim is the niche that we cover on this YouTube channel. And if you're interested in getting a head start on your codified trading journey, I have published over 150 Thinkorswim codes over on my website, daytradingstrategies.net. These range from studies, scanners, strategies, conditional orders, etc. And right now, there's even a handful of free ones over there that you can check out. So a link to this website will be down in the description below this video. At least go take advantage of the free codes, read the reviews, decide if it's something that could help accelerate your own trading journey. So here is the source code for the strategy that we're currently running. Not a super complex one at all. Our buy condition is simply when the awesome oscillator value from previous bar is lower than the value from 2 bars ago. So basically, the previous day's awesome oscillator was red, and today's value is greater than yesterday's value. So buy when we get that switch from red to green on the current bar, and our sell is when we once again get that switch from green back to red. The awesome oscillator on this bar is less than the awesome oscillator from the previous bar. I want to switch it up now. I want to try something else. The awesome oscillator also has the 0 line on it, where it's either above or below. So I want to define a new buy. Let's go buy 2, and I want to set this equal to when the awesome oscillator function crosses above 0, and let's define a sell 2 as the awesome, spelling awesome oscillator and talking is hard, crosses below 0. So basically, when we cross above the 0 line, as you can see what happened right here next to me, we will enter. When we cross back down below it, we will exit. Let's go ahead and make the buy 2 and sell 2 our conditions on our actual add order functions. And let's now run this strategy. I don't know if you just noticed, hopefully you remembered the conversation from before, but remember before on SPY, the S&P 500 daily chart, I said it wasn't profitable. It was not a profitable strategy because the max drawdown was way too big. It was like 220% or something. Well, switching it to this 0 line strategy, all of a sudden the max drawdown percentage on SPY comes all the way down to only 18%. That's good. That's a profitable strategy. And by the way, I just checked, and with the previous strategy we had built, the red to green switch, the total number of trades on SPY was 740. Now with this 0 line strategy, it is all the way down to only 209. So it's taking way less trades and making way more money. This average trade number went way up. On the previous strategy, it was averaging $10 a trade. We're now averaging $158 a trade. That is a much better back test. That means the strategy has a much higher chance of actually translating from working in back testing to working on live market data. Now you'll notice, obviously, because of that, we are in our trades for a lot longer. We get in this trade in November, on November 8th. We get out of it on what's after March? April 16th. That was embarrassing. April 16th is when we get out of this. This is a 5-month hold. But I said this in a video a couple days ago. Who cares, right? A lot of time beginners get holed up in this idea of like, oh, I don't want to hold a trade for that long. Why? Why don't you want to? If the trade is winning, let it win, right? Let your winners run. You should hold winning positions for as long as you can. You should hope to never sell this position. That's the best case scenario, right? To never sell, that it just flies and flies and flies. Of course, that will never be true. Eventually, it's going to come down and you're going to sell. Just that is what's happening with this 0 line. You're going to have longer holds. It's really letting its winners run. And at least here on SPY, it looks a lot better. Let's go look at some of those other names we were looking at before and compare there as well. All right, so a couple of the names we looked at before. NVIDIA, I mean, look, NVIDIA is NVIDIA. You can plug any bullish strategy into this thing and it's going to look really good. But the main number I want to focus on here, and this is the main number I focus on in all of my back testing. That's why I find these back test labels to be so damn important, and that's why I built them. This is a custom study available over on my website. Wink, wink. But for real, I don't know why I'm winking. It is available on the website. Listen, anybody can make a strategy that has a huge total P&L. Like I could make this floating P&L study green very, very easily. That's not hard to do. What's hard is to get a strategy that's very green with a very small max drawdown percentage. So this is the number I want you to keep an eye on. Even when you're looking at like really bullish names, getting a max drawdown, a low max drawdown percentage can still be difficult. So on NVIDIA, only 10%. That's lovely. I really consider anything, and this will differ trader by trader depending on your personal risk tolerance, but I will consider taking any strategy from back testing to forward testing as long as the max drawdown is below 30%. So 10, very, very nice. Another stock we looked at was Apple. As it loads in here, wow. Apple has a max drawdown percentage of only 4%. That is lovely. That's very, very nice. And then we also looked at Tesla. Okay. This strategy is very interesting to me. Tesla has a max drawdown percentage of only 5%. Guess what? 36% win rate, but the average win being 10 times greater just about than the average loss. That is very, very nice. Gives you a very small max drawdown percentage. I like the way that this strategy looks. I like this use case of the awesome oscillator being using it as a buy when it crosses the zero line and a sell when it crosses the zero line, rather than the actual like histogram values changing from green to red themselves. Since I like this strategy so much, let's actually in this same video go ahead and build a scanner, because it doesn't matter how good the strategy is if you can't find the setups. And actually, I want to take a moment here just to really show you how you can turn any of my strategies into scanners. On my website, I would say 90%, 85% of my strategies already come with associated scanners, so you won't really need to worry about doing this. But if you find one that doesn't, really all you need to do, right? This is our buy condition. Our buy condition is when the awesome oscillator crosses above zero. I'm just simply going to copy that condition down back within my scan tab, add filter. I'm going to add a filter of study type into the pencil icon, into the ThinkScript editor, just paste in the buy condition. Whatever the buy condition is, paste that into the study filter. It will now only return to you stocks in which that buy condition is happening. And for this buy condition, since we're using crosses above, that means it needs to be happening on this bar rather than just returning to you any stock where the awesome oscillator is greater than zero. It will only return stocks in which it is happening on this bar, which is great because now every stock that is appearing on this list has the entry setup happening right now on the current candle. So let's go ahead and take a look at the results. The first one is NVVE. I will tell you, just taking a quick look at the description of this one, I can see that NVVE is a holdings company. I don't really like holdings companies outside of Berkshire Hathaway. They're not real companies, right? Like the chart setup isn't representative of what a real company would be doing. It is instead just a holdings company, right? It's a collection of companies. So whenever I see a holdings company on my scanner, I skip over it because once again, it's not representative of an actual chart setup of an actual company. And here we go. This is what a lot of holdings companies looks like. It's just crap, right? Like it's a really crap stock. Wouldn't be interested in trading this thing ever, but we can confirm the scanner is at least working. On yesterday's bar, the awesome oscillator was less than zero. On today's bar, it is greater than zero. That's what we want to see. Let's go down to a real company now, AG. This is a silver company. Sure, how is silver doing lately? I'm pretty sure precious metals have been doing well. Not that great, actually. Maybe it's just gold that's been doing well. But anyway, once again, we can now see at least the strategy on a more real company, not a holdings company, is performing a lot better with a sub 20% max drawdown. And we can see that we are getting that zero line cross on the awesome oscillator today. So the scanner seems to be working as intended. Now, I realize a question we haven't answered yet that I'd like to answer in this Exploring Indicators series is, does it work as a day trading indicator? So far, we have only looked at the daily chart. Let's hop on down into the 5-minute chart for NVIDIA. And once again, okay, we have profit. It is green, but max drawdown of 350%. By the way, I haven't mentioned it yet, but for anyone new to the channel, if you don't know what max drawdown is, it is a running total of difference from peak to valley in total P&L. So it's probably something like this peak here being up $7,200 to this running trough then being down $3,000 just a little bit later. That's likely where that 350% max drawdown is coming from. Once again, anything above 30%, I would not consider a profitable trading strategy. If we hop out to the 1 hour, gets better, but still 93%. So I'm going to say, and I didn't test all the time frames across all the stocks. I'm not going to sit here and do that for an hour, but I'm going to say that the awesome oscillator, at least this zero line strategy that we've built, maybe doesn't work that great for a day trading strategy, which is honestly like often the case. I don't know if you guys know this. Hopefully this isn't a secret to you, but day trading is harder than swing trading. Stocks are just moving a lot faster. They're a lot more erratic. The shorter the time frame you're looking at, the harder it is to predict what kind of move is going to come from it. Thus, studies and the equations built within them have a harder time judging the direction. It's actually true that typically, and let's try this, typically the larger time frame you look at, the better a study, should I say, and the associated strategy perform. We just popped out to the weekly chart now. NVIDIA's max drawdown comes all the way down to 3%. SPY's is all the way down to 6%. Apple's is sitting at 12%, which I think about the same as the daily, but still, typically studies work better on larger time frames. Just to wrap up the conversation, it doesn't seem like, once again, I didn't test everything, but just a quick look, it doesn't seem like our awesome oscillator strategy would be a great one to try to utilize in day trading. That's okay. That doesn't mean that the indicator is bad, right? Like, oh, Trey, well, then this indicator sucks. It's just use it for swing trading, right? It's important to know the weaknesses of an indicator too. Where not to use it is very important to know as well, correct? This strategy has already been uploaded on my website alongside the over 150 plus other custom thinkorswim codes. Once again, link to the website in the description down below this video. And remember, there's a handful of free codes over there, so at least go take advantage of those, correct? Hit like on this video if you learned something, subscribe to the channel if you would like to continue learning, and if you enjoyed this Exploring Indicators video, I'll link to the rest of the playlist here. Go check that out now.